Hi everyone, today we're going to be going over the value days destroyed multiple and how you can use this tool to help improve your Bitcoin investing and analysis. This chart, as well as many others, are all freely available on lookintobitcoin.com, your number one source for Bitcoin information. And if you haven't already, don't forget to like the video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. So what is the value days destroyed multiple? Well, this is taking into account one of the metrics we already have on lookintobitcoin.com and just expanding on top of that. So the metric it's taking into account is the coin days destroyed metric. And we actually have this chart already on lookintobitcoin.com, which I definitely recommend checking out. Now, this coin days destroyed metric is one of the older data points we actually use when looking into Bitcoin data analytics. It was first coined in 2011, so it's a very tried and tested Bitcoin metric, and it tries to identify periods where the market may be overheated or potentially undervalued by taking into account the amount of Bitcoins being transacted. So I think the best way to really explain the coin days destroyed metric is to just give you an example of how we'd actually calculate the number of coin days destroyed. So for example, if I held 1 BTC and I held that 1 BTC for 10 days, and then after those 10 days, I transferred it to a new wallet, potentially to actually sell that BTC, I would add 10 coin days destroyed to this metric. And the same calculation would be true if I just held 0.5 BTC for 20 days. That would also equal a 10 coin days destroyed added to this metric, as 0.5 multiplied by 20 would equal 10, as just 1 times 10 would. So why is this metric actually useful? Because not only does it tell us when a substantial amount of Bitcoin is being transacted on chain, but also weights these transactions to those that have been holding the largest amount of Bitcoin for the longest period of time. So on this coin days destroyed chart, by default, this orange line here is actually showing us the 90-day moving average of this coin days destroyed value. But we can actually remove this and add just the raw data, which gives us on a day-by-day basis the total coin days destroyed. Or we can actually remove that and add the 30-day moving average, which is actually what the value days destroyed multiple is utilizing, or at least one part of it is utilizing. So we can interpret that those that have been holding a substantial amount of Bitcoin and have transferred it after a substantial period of time usually have a good insight into the timing of the Bitcoin market, and especially when it comes to transferring or selling at the market peaks. So we can see here, once we actually take this 30-day coin days destroyed value, but then multiply it by the underlying price of Bitcoin at the time of transfer, we can actually see the impact that has on the underlying market and the underlying price of Bitcoin. And if we then divide that 30-day coin days destroyed multiplied by the price value, so the 1 month coin days destroyed average multiplied by the price, and divide that by the 365-day average of the same metric, or the yearly average, we can get a good indication of the current rate of large substantial transfers on the Bitcoin network compared to the yearly average. So rather than just the raw data of coin days destroyed transactions, if we compare that to a longer time frame average, such as the yearly moving average of that, we actually get a really good and accurate indication of when there's a substantially large amount of Bitcoin being transferred by these larger, more experienced players in the market. And what we can then do to standardize the data as Bitcoin grows and matures as an asset class, and especially as the circulating supply increases, if we just multiplied that value by the circulating supply at the time of those transactions, but divided by the hard cap of Bitcoin. So the hard cap of Bitcoin is the maximum circulating supply we'll ever see, which is 21 million. So right now the circulating supply is about 19.3 million. So if we were to multiply this value right now, we'd actually be multiplying this value by a value of around 0.93. So this just standardizes this data so we don't have a skewed increases and volatility in the early history of Bitcoin's price. So this may all sound a little confusing, and it is a lot of maths and formulas to take into account. So I definitely recommend coming to this look into Bitcoin chart and just scrolling beneath, and you can see a little bit more in depth into the maths and formula behind this. But as you can probably immediately tell, it very accurately highlights the areas of Bitcoin's market price being very overheated to the upside, and then also identifies periods where Bitcoin may be at a considerable discount to traders and investors. So these red peaks we see here indicate a huge amount of large players in the market are transferring substantial amounts of Bitcoin after a substantial period of time, which is definitely a huge increase on the yearly average of those transactions. And then standardizing that data, we get these red peaks, which indicate very accurately the price tops in Bitcoin's price action. And yet these green areas really do indicate periods where Bitcoin may be undervalued, because these indicate that traders and investors, especially those that have been holding their Bitcoin large amounts for a long period of time, aren't willing to part ways with their Bitcoin, as we can assume that when they're actually transferring these coins, a majority of the time it is to actually sell. So when this value days destroyed multiple is extremely low, indicates that not many of these larger, more experienced players aren't willing to part ways with their Bitcoin, probably because they anticipate that higher prices in the future and it doesn't make fiscal sense to sell at such a discount. So just to summarize, the value days destroyed chart builds upon the coin days destroyed chart to try and identify periods of the Bitcoin price being overheated or potentially undervalued. And by factoring in the transactional on-chain value and comparing that to a longer term average, in this example, the 30-day average compared to the yearly average, we can see an accurate representation of when larger and more experienced market participants are more willing to part ways with their coins. And historically, accumulating during the green value days destroyed multiple phases has provided outsized returns, especially when considering profit taking during the orange or even red areas of the value days destroyed multiple. If you liked this video, then please visit lookintobitcoin.com. Look Into Bitcoin uses market data to provide you with an edge by highlighting when emotions make so many market participants take poor decisions with their Bitcoin investing. Don't forget to like and subscribe to the channel to learn about all our other charts and gain even more insights. Thank you very much for watching, and I'll see you in the next one.